Good afternoon. I am Toshio Sugita, President of the Asset Advisor of NIPPON REIT. Today, I would like to deliver the summary of financial results of NIPPON REIT in the 13th period ending December 2018. In the 13th period, the company posted operating revenue of 8,458 million yen, net income of 3,839 million yen, and DPU of 8,536 yen, 163 yen higher than the forecasted value of 8,373 yen. These results are due to our success in maintaining a high occupancy rate, rent increases, cost reduction measures, and measures to enhance the value of our properties. Furthermore, for the 14th period ending June 2019, we shall post a gain on sales of real estate properties related to asset replacement we plan to implement at the end of this February. And then we forecast operating revenue of 8,983 million yen, net income of 4,268 million yen, and DPU of 9,486 yen. For the next 15th period, operating revenue is forecasted at 8,579 million yen, net income at 3,895 million yen, and DPU at 8,657 yen. The next graph that you see in the bottom left corner shows the transition of DPU. As you can see, we have posted the results exceeding the forecasts in each and every period since listing. The graph on the right from the one displaying DPU is the growth in the NAV per unit, and the figure in the end of the 13th period at 342,122 yen, compared with the 247,275 yen at the time of listing, shows that NAV grew about 38% over 4 years and a half. This slide shows our track record and DPU forecast. The orange line graph shows the trend of dividends excluding non-recurring factors such as fixed property tax and city planning tax, investment unit issuance expenses, and other factors relating to public offerings. You can see that NIPPON REIT is on a steady growth path. The company aims at achieving the targeted DPU of 9,000 yen, and the forecasted DPU for the 15th period, excluding non-recurring factors, is 8,622 yen. It should be noted that the normalized DPU, excluding non-recurring factors for the 14th period, shows a decrease. And this decrease is due to revisions of the repair plans. The repair plans that have been expected to be implemented in the future were reviewed, and the company has decided to implement some parts of these plans preferentially in the 14th period from the point of view of the dividend management, considering the forecast that there will be an increase of the DPU due to gains on sales of properties, resulting in an upward move of the financial figures. Now, regarding our future targets of DPU, on a short-term basis, the aim is 8,800 yen, and on an intermediate-term basis, 9,000 yen. We thus intend to continue pursuing our targeted DPU. This slide shows that the summary of the properties acquired by the company through public offering made in July of last year. As you can see in the bullet points listed in the upper side of this slide, the acquisition was well balanced in terms of asset types, centering on the medium-sized office buildings located in the 6 central wards of Tokyo, and including residential buildings in the center of Tokyo, of which the rents continue to trend upward, as well as some highly profitable office and residential buildings in the 3 most important metropolitan areas, Osaka and Nagoya, besides Tokyo. The company thus acquires properties with a relatively high yield, even though in the current hectic market for property acquisition. It should be noted that the contributions expected from these newly acquired properties are already reflected in the forecasted earnings for the 14th period. This slide shows information regarding the asset replacement we plan to implement at the end of this February. The plan is to dispose of 2 properties, which were chosen as a result of tiering all the properties done by us, and to acquire a total of 5 properties, including the property already acquired in January. The rationale for this asset replacement is listed below. The first reason you see on the left is the improvement in the quality of our portfolio. The way we see it, this will be achieved through the rejuvenation of the portfolio with relatively newly built properties, resulting in better liquidity, enhancement in profitability, and also through securing the stability of the cash flow. I would like to add a few words regarding this last point of stabilization of the cash flow. One building among the properties we intend to dispose of is Maiatria Meiki, which is located near Nagoya Station, and as a maglev line is going to be built right under it, will be expropriated by the JR Tokai Railroad Company in a certain period of time. We decided now to sell it off, as it will be pulled down someday for preparing a maglev line. Now let us look into the value-enhancing strategy and ensuring growth potential, the reason described in the middle of the slide. A general contractor that owns some land adjacent to yet another property we intend to dispose of, Forecast Itabashi, approached us with their plan to redevelop their own land together with our land, requesting us to sell Forecast Itabashi. We had constructively negotiated with them upon the request and decided to sell it. In exchange, we will firstly acquire Kamedo Imark Building, one of the buildings owned by the contractor that was built less than 10 years ago, which is a high-grade, high-specifications building with DBJ Green Building certification. We secondly will retain the preferential negotiating rights for the post-development of Forecast Itabashi, which is situated in a prime location, making it very valuable, ensured that this move is made with due considerations paid to the future external growth strategy of the company. You see on the rightmost side of the slide, I would like to highlight the point regarding return to unit holders. Just as described here, the idea is to achieve unit holder returns funded from unrealized gains. But we shall not be merely returning most of the profits made on sales to the unit holders, but rather appropriate some parts the profits for the repair plans that are expected to be implemented in the near future. And we believe that it is a meaningful measure that shall improve the future value of the company. We continuously shall seek for possibilities of working on such a redevelopment scheme, made efficient use of the properties as one of the valuable methods to enhance the quality of our portfolio. This slide shows the internal growth and the occupancy rate of 99.1% on the whole assets is a little lower than what it was in the end of the 12th period. We are still maintaining it at a level that is very close to full capacity. If we look at the figure for the offices, 99.4%, and also considering the fact that the number of our tenants is over 600, the company surely managed to achieve an occupancy rate at a very high mark. Also, the company achieved the highest ever monthly rent increase for the offices in the 13th period at 6.3 million yen. For the periods from the 7th period, the total rent increase amount is 28.7 million yen per month, which in annual terms translates to a rent increase of approximately 344 million yen. Just for calculation purposes, we can recognize this rent increase's contribution to a DPU of 382 yen in 6 months if we divide the figure of 449,930, the current number of investment units issued and outstanding. Please note that this is just the increases made in the rent renewals, and if we look at the rent increases made at the tenant replacements, This gives us an additional amount of 3.38 million yen of rent improvement, which together with the rent increases made during agreement renewals, translates to a monthly rent increase of about 10 million yen in the 13th period. We believe that this achievement was done by our dedication to the discipline that the company has always been particular about, based on the growth potential of the properties we acquire, making sure that it is an integral part of the company's acquisition policy. Furthermore, in terms of the reinforcements of the company's profitability except for rent increase, we spare no efforts to steadily accumulate a track record of achievements through continuous engineering management. The company posted in the 13th period an increase in the NOI of approximately 19.90 million yen, and has counted the track record since the 7th period. The total amount for 7 periods combined is 245 million yen, which translates to a DPU of 272 yen. And now let us move on to the financial status. As of the end of the 13th period, the balance of interest-bearing debt stood at 126.1 billion yen, and both the long-term debt ratio and the fixed interest rate ratio at 100%. As we shall be making a new short-term borrowing of 700 million yen, accompanying the asset replacement planned to implement at the end of this February, the balance as of that time shall be 126.8 billion yen, while both the long-term debt ratio and the fixed interest rate ratio decreasing a little. Regarding LTV as of the end of the 13th period, LTV stood at 46.9%. The plan is to continue to control it in the range between 45% and 50%. Also, as you can see in the lower right of the slide, the company did refinancing with banks as per schedule in the 13th period. We have kept our financial policy to gradually extend the borrowing term, paying sufficient consideration to the balance between durations and costs. And we concluded the refinancing of the borrowings of 13.4 billion yen out of the total of 14.9 billion that had their due date during the 13th period, distributing the due dates from 6 to 8 years from the recommencement day. As for the remaining 1.5 billion yen, we issued 10-year investment corporation bonds at the reasonable rate. As a result, as of the end of the 13th period, the all-in cost is 0.96%. On the other hand, we have extended the average borrowing period to 5.67 years, while the average remaining borrowing period has also been extended to 3.62 years. Furthermore, for reference purposes, the figures are described as they are after the additional borrowing at the end of this February. And these figures do display a certain decrease in the average years resulting from this short-term variable rate loan of 0.7 billion yen. This decrease is temporary, and we shall extend the terms on due dates in line with our financial policy. We would like to promise to continue on our current management course for striving to always ensure a good balance between overall gains of properties and costs of borrowings.